Awesome. So I'm gonna have to do it live this way because for some reason when I was trying to do it through my PC, it wasn't coming up, which is fine. Right now it seems like it's working from the phone. It's gonna go forward and do it this way. So let's have a little look. I wonder how loud this is. What are you guys looking at today? Just gonna wait for some people to join because I did have some technical issues. Wonder what should I play? So let's have a little look. Not really much. I think I was looking at Aussie CAD and I was also looking at let's have a little look. So favorite pairs. All right, so favorite pairs at the moment for me, I'll be honest with you, I am actually looking at quite a few different pairs. Depends on how they shape up, but I really do like the positioning on some of these pairs. So I'm just gonna flip my camera so you can see. So I've got over here, hold on. Apologies for that. All right, so I've got Aussie CAD, which I was looking for price to come here, but it seems like it responded from there. I did start filming this video, but then I had some technical issues, so I had to stop the video and then start again. Basically, we had this little bit here where we had the rejection there. For me, that wasn't enough. I really did want to see price tap into those areas before we went, but we got the entry here and then it kind of just went long in session, which is fine. I wanted to see it come down here, so I was happy to stay out. Looking at Aussie CAD could still come down, but I would want to see an Aussie CAD long. You can see that there's quite a lot of ballpark play to play there. So if it does come back down, give me an entry in those areas. I've got a really nice risk reward to the upside. Euro GBP. I think Euro GBP is one that's quite interesting because of where it's positioned. But the thing that I don't really like about it is, despite us having this like overall sort of whatever it is, right? It's just in the area right now. So I do need to see it really follow through and commit. But we're in a really good positioning for an Euro GBP play right now. It's just, it could take some time to develop. So what I do like about this is that's the daily value area, and I'll call it weekly. It's now near missed, came down, came back up, near missed again, came down, failed. It's now coming up. It's definitely coming back up to these areas, but what we might see is a follow through to the upside ever so slightly, and then we might come back down, or it might just tap into it and just sell off, because clearly when we've got there previously, we have had some pretty strong responses. So that's what I'm kind of just paying attention to right now, is the response. I do want to see a break above though. I don't want to see it just tap into it. I want to see some sort of significant break where people are like, okay, we've been caught out, and then boom, comes back in, gives us something and goes. On the case where I wasn't looking for that and I just wanted to kind of keep it for what could shape up today, is if we had this and it spiked up with momentum, came back in and gave us some sort of insurance entry for New York session, I would have been all over that. It was looking around about 7:30 in the morning. It was coming off momentum. This had more than enough room to kind of just break those highs if it wanted to. It didn't, and I think this stall is very intentional and it's a bit of a trap right now. So with Euro GBP, guys, I would say this is a bit more of a trap right now. So I'd be extra careful with this one because this is showing signs of underdeveloped, probably trapping people out, pushes back up, takes out the high, and then comes back down or develops. So I'll be patient with that. I'll get to AN, but I don't have AN actually on watch this week. I've got GBP Aussie, where again, GBP Aussie was another one that kind of just slipped the net for me. I was paying attention to the gap over here and basically the high, and I wanted to see price come back up into those areas before we sold. I think there's still room for it because if I go to the 4 hour, we look at the positioning in terms of where we're situated within this overall move. There's more than enough room for it to develop over here to continue lower. So this is kind of showing me signs of potential larger flag territory, where right now what we're seeing is price is selling off. There's a low to the side here, but we're not worrying about that too much. This then makes its way back up, takes out the high here, and then we start selling, and it continues within this overall move to the downside. So I'm going to be waiting for that. That would be the trade that I want to really see, because then at least we have a clear run to the downside and we can play this sequence here, and that's basically what I'm looking for. So GA, and then I've got GJ. GJ, it's a tricky one because I think I was mentioning this before. The sells is there, right? You can see the value areas here. We started squeezing. We then broke the squeeze here. At this point here, I did want to see some level of continuation, but we just started following through. In many ways, I'm not mad because, you know, it's just confirming the move even more. It's just now I need to wait for an entry to shape up. So the odds are I would want to see some sort of pullback, bit sharp, comes down, develops, and then this does that. And then eventually, you know, we get some sort of continuation to then play the next move to the downside. And then we can play back into those areas there. And then we're basically playing from A to B. Obviously, it's most likely not going to be this clean. It could be steep, it could be smaller. It doesn't have to be as large as I've just shown it. I've just obviously demonstrated it in terms of simplistic reasons. But, you know, we could see something like this. You know, and it's a bit more like that. Left a bit of a gap here as well. Clues, and then we basically just follow through, manage a bit more aggressively at those points. But then we're really playing it to that section there, and then we take advantage of that overall sequence. That's basically what I'm looking at. What's going on, Zephyr, my number one guy, honestly. But yeah, for real, like GJ could shape up to be a really nice one. It's one of those ones where take a step back, just be patient with it, because really and truly the patience is going to pay on certain pairs like this. You've got the momentum now. You can see that clear momentum. All we need to see is that's going to be confirmed by continuation of whatever size and whatever nature it shows. And then basically it's invalidating the idea that this then just retraces and comes back up and then becomes a part of its next piece of whatever it is. So I don't think that's going to be the scenario. I don't think that's going to be the scenario. I think we are going to get that continuation. We just need to wait and let it develop, create those two tops, two bottoms, and then we can see how we can get positioned in it. Aussie US dollar. Aussie US dollar is another one which I think slightly underdeveloped at this point. If you're looking at that little point there, I don't think it holds as much weight as you'd want it to. I think the fact of the matter, if we failed to continue through all of this, we've then broken above, we're creating continuation here. This is a really interesting bit. I mean, obviously we have a bit of a gap hit, right? That could get filled at some point. But more importantly, what we're seeing here is there's a gap here now. This comes up, taps into this area, comes back down, creates the 1, 2, 3, and then we go. Maybe we don't go exactly on that. Maybe we wash out a bit. But even so, this is the sort of area we want to go to then play the sequence to the next point up there. Right, that point there is what we want to play, and then we want to play that overall move. And there might be some more corrections. Overall, the sequence is looking a little bit choppy, but this is basically your, call it your volume sitting above the failed continuation to then move to the upside. So that's your final sort of calling to take that move. And I think that's a really nice play. So I wouldn't worry about that little hook point as much, because if you get that 3 touch, it's going to be more than easy to smash through there, because there's enough volume built up in this section included with all of this, and now it's just breaking down. So we do not care. What do we not care about? Euro USD. Euro USD is certainly probably one of the most interested ones right now, because there's a lot of pattern separation to it. If we use the same methodology we just spoke about, where we failed to continue here, we then created continuation here, and then we did another continuation. Right now we're in the section where we have another continuation there. It is corrective, so by nature this, you know, it's building up volume in a very corrective way. This can still move to the upside, but the likelihood is, because it's so corrective, it can just develop, it can become more messy, things like that. So it comes with the territory of trading in these market conditions. But right now, in terms of pattern separation and sequence, it's looking pretty decent. So I'll be honest with you, I'm not too phased about taking a trade right now or rushing into something. I just want to see this kind of give me that clear entry criteria. So this in some ways kind of did somewhat enough in terms of the squeeze, where we came back, we retested it, we took out the liquidity here. We already had our sort of pattern separation in a sense here, and then this is just going now, and then that's basically one piece of its own, that was one piece of its own, that was one piece of its own, that was one part of its larger structure, and then you can basically just see it like that. However, as I just mentioned, it has room to develop. So mentioning that level of development, the question is, we could be seeing something in the signs of this, where we then have this is the high, we then leave a gap now, this comes back down for New York session, it comes back down into those areas there, you're able to get repositioned for a long, testing the back end of all of that liquidity there to the left, and then we basically make the move and we move to the upside. That's basically what I'm going to be looking at for New York session, or worst case scenario, London session tomorrow. But again, it's a long shot, because there is more than enough right now for this to kind of move to the upside. But in terms of, you know, just the general sort of squeeze and how we're moving, you can see how that kind of just fits within the channel. So a trade over here would be solid. So that's what I'm going to really be banking on EU. If you guys have anything different, definitely be open to seeing what you guys are looking at for EU. And then S&P 500, again, all-time highs. Right now, this is brilliant, right? Last time I checked, so I'm just going to double check it right now. Give me 1 second. Let me just quickly open it up on here and sign in. I don't mind sharing this stuff, to be honest. I think sharing this stuff is somewhat inspirational for a lot of people, regardless. I'll have to log in. What's going on? Should already be logged in. Oh gosh, all the time. All right, 1 sec. Let me just log in over here. Right, wrong username and password. We're not going to see it today. I'll show you guys another time. On my S&P, oh actually, no, I have a screenshot. I sent it to my wife today. Yeah, there we go. Here we go. So I have this in here in a ISA, and you can already see it's running 23.9%. Oh, sorry, 29.38%. And that was pretty much as of March, roughly March. I put an investment in, and I did that through ISA, so I put 20 some point at the end of March, and then April I put another 20, so in a process of like 3 weeks, there was like 40k put in there. But then after that 40k was put in, you can see over the course of however months it's been since April, 6 months, whatever, 7 months, it's already appreciated 29.38% because of the positioning of understanding how to trade. I was able to make that. Also at the same time, yeah, I did have capital, still do have capital. So it's one of those things where you have the skill, you can make your money not only through CFD trading, but you can actually diversify it into other forms of investment and use your ability to trade to make more money. And yeah, it's brilliant. I mean, look, it's an extra, 11 grand right now. Year's not even over. Obviously, we're going April to April, let it compound, but an extra 11 grand on the side of, just learning how to trade. That's the sort of thing that you want to be having in place as well. So again, if there's people watching this and, they have large sums of capital and they don't really know what to do it, I'm not trying to give you financial advice in any way, but you can reach out to me and I can tell you what I did with my money. And then you can basically pretty much learn from that and basically apply that to your own capital, or you can take that and go speak with a financial advisor if you want to, and then get better insights. Do you have any plans on exiting, or are there a long-term? Wait, hold on. Let me just scroll up because I did miss a few people's questions. Took gold early this morning, just got taken out. I'll come back to that question. I'm just going to go through gold quickly. So let's go to your commodities, swap over. All right, sweet. So gold. Let me just clear this chart off because I was doing some other stuff on it. All right, so you took gold this morning. I hope you took it for the short. I'm assuming you took it for the long because you got taken out, but gold for the short, man. That's the gameplay. Remember, we've been saying this now, right? Here's the clues as well. Nothing goes up forever. Okay, the market needs to correct. It's healthy pullbacks. If the market keeps going up, it becomes unsustainable, and then we get these sharp declines. Right now, what we're getting is a sharp decline. Euphoria is through the roof. If you haven't had a gold conversation with some random stranger in the past 3 years, then in the past 3 months, then there isn't enough euphoria in it. The euphoria kicks in when everyone starts talking about something, like Bitcoin, for example. So what you can see with gold is, like, after weeks, we had a strong push, and then silver was the clue, but we then had a weekly decline where price stalled. So it was like signs of, are we at the beginning of a correction? That's what we always have to ask ourselves when we sit on the larger time frames on the weekly. The weekly ended bearish after strong bullish momentum. Are we within a correction, or are we at the start of a decline? We don't know, so we have to establish that. You then see on the daily that strong candle, right? That candle was made up of a small wick, but it cleared the low there, and it's really showing bearish momentum. Tell me, obviously, you need a lot of money to push this to the upside, but who is taking their profits here and who is selling here? That's a real big question you have to ask yourself when you do look at this on the daily. And then when you think about that, is what would these people, institutions, banks, and stuff be doing at this point here? Where are they moving their money to? Because if it's coming out of gold, it's going somewhere else. They don't take their money and leave it in the bank. They move their money around, right? There's only a time where they take the money out, and that's during like a financial crash, or even at that point they start hedging. It goes for a level of damage control with hedge funds and institutions, but again, it's not something that we used to worry yourself with. So big decline, and then we had a bit of a consolidation there, and then we had continuation. That's healthy sign of pushing to the downside. It wasn't the cleanest, don't get me wrong. A lot of people would have waited for the perfection of it coming back up here and selling. Again, it didn't do that, but you've got the low here, which is pretty much the origin of that leg there, and it's already cut back into it. So when it came down and corrected here, we knew that the next inflection point, had you been in the trade, you would have managed into that point. On the 1 hour, really and truly, you would have been waiting for the trade here to come back into those areas, like probably 60 or 70% of the market who trades at value areas, support, resistance, and so forth. And you were waiting, price came, and then it just decided to sell from here, right? Then it hovered in that area, and then it sold. You arguably could have seen something like that to manage into that low there, but even at that point, you're still within that range. At this point here, the range was defeated, because what you can see here is that's your high, that's your near miss, that's your push back up. Didn't quite get there, so it's still near miss. Then it pushed down, continuation, came corrective, but then it's at the low, through the low, and creates continuation. If you're going to take a trade there, you're either going to take a short or you're going to stay out the market. you're not going to take a long. And if you did take a long, it's a bit reckless, because when you zoom out and you look at it, where are you trading to? We're trading here. So what's the likelihood that if we come back down here, the odds are if we create something here, the odds are we're probably going to come here at least, and then I can manage it to break even, or at least 1% or 2%. What was this? As part of our holiday meal trip. Best part of the meal. What? Let's see. This is. I'm just going to check something. This YouTube's just giving me some weird pop-up. What pairs do you want to see? I hope that popped up on the screen for you. If you answer it, I want to see how that comes through on my side. But yeah, definitely. So that continuation, you take that and you can basically play it into the next point there. All right, the real question now is, how do I get rid of this? Can't get rid of it. All right, so if you took a trade in there, you should have been short, you should have been long. And if you did get long, then you missed the picture. Now we refine it a little bit further on the 15-minute. You can then see again, same sort of thought process. You've had this section here. This is your flag, that's your middle section. And then you've come in, you've actually had your small consolidation inside. You've then had your next consolidation right there. And then probably on the lower time frames, you've had more, but it just followed through to the downside, and you would have managed it aggressively, probably stops around about there, and you would have just been in and out of the trade. So again, I think gold had some potential there. Definitely had some potential. Let's have a look at the next question. All right, so do you have any plans? Oh, the view on the DXY. Right, yeah, DXY. I think, just flip this. Sorry, this thing's in the middle of the screen. Oh, that's how I get rid of it. Perfect. All right, cool. So, 4 hour DXY. That DXY is, it's not really responding to this accumulation here for the long. So it's showing signs of a short right now. So if we get more continuation in this area, yeah, man, we want to be looking at shorts right now, because the longs are just failing. The longs are failing. It is within a squeeze though. And that's the only thing that's kind of holding this together, is that this is just extending, but it's just kind of, this bit is more of an extension of all of that. And it's kind of extended out, but the more it extends, the less power it has towards the longs. So right now we've kind of had this little section here. This is kind of evolving now, and it's kind of just going to be like this. And if we get something like that, you could potentially see a trade like this, where you go down, you get insurance entry. This will 100% be insurance entry, and then you basically take the insurance entry to go short. And then again, it's still a part of this, but then it becomes more of a running channel, where it's kind of like your tops, your middle section here, and then that's your third bottom, that's your third top, and then that's your insurance entry to confirm it even more. And then you're basically playing the drop off there. And then when you zoom out and look at it, you know, you can't really see what you had to make do with on the lower time frame, but it's all there. So it's basically looking like a running channel to the downside. The only time that you know that this would be invalidated is strong momentum comes in the market and this pushes straight up. It just pushes straight out of this channel and it's all the way up here, and it creates continuation at this point. That's a no-brainer that we're no longer respecting to the downside. There's no running channel, there's nothing to really support the short. The accumulation coming to the downside here was just building up for a strong move to the upside. You could wait for something like that, or once it starts following through, you're going to have quite an impulsive leg to follow. because the market's really made its decision up at that point, and then people start rapidly selling like we've seen countless amount of times. All of that becomes a very impulsive sellable wave, and then we can look at US dollar related pairs for it. So that's basically my view on the DXY. Let's have a look. Do you have any plans on exiting, or are there more of long-term homes? Oh, okay. I assume this is about the S&P. Yeah, so I'm not going to exit. I'm not going to exit because I have got a long-term plan in mind, which I can try share with you right as well. Let me pull it up because I know I sent it to someone. Give me 2 seconds. So I don't have plans, it compounds. So I'm going to show you a simple maths compounding calculator here that should really help you understand why this is a great investment. So here we go. So if you see it here, if you start with 20, which let me just put this man. Starting balance is 20, right? And interest is 15%. Now the average over the five previous years has been 17.7, but I'm using 15 just because it's kind of like the minimum level of what it kind of gets to on average. But this is just a figure based on a figure that is just an average really, but the average is much higher than this currently. So over here, in theory, you put 20K, you make 3K. You've got 40K, you make 6.45. Now, bear in mind, I've put 40K and I've made almost double this in a year, right? So you have to kind of bear in mind that this is just a figure based on just an average, but it can be more, it can be a lot more, right? Sometimes it can be less, very rarely, like with a one-off year in 5, but the majority of the time it's going to be between 15 to 30%, which is really good returns. You can see then every year I'm adding 20, right? 20K a year. By 10-year period, I've added 20K a year, so that's 2, 4, 6, 8, 10, 2, 4, 6, 8, 10, right? That's 200K, my money's doubled essentially at this point here. But the most important thing here is that even though I've put in 200K at this point, you have to come to a realization that interest-wise, on average, remember based on 15%, I'm making 60K a year from just leaving my money there. So treating like a bank, but the reason why it's 20 a year is because that's what the UK ISA offers me. So it's non-taxable. So if I take out that 60K, that full 60K is non-taxable, that's mine. So then every year, if my expenses is, let's say 5 or 10K, that's pretty much covered. So I don't even have to take the full 60 out. I could just take out 15K. So I'm covered for that amount and a little bit more. And then, the 50K compounds on top of it. And then again, I could leave it and still keep adding 20K, and it just compounds. So then over the next 10 years, this is where it gets even more interesting. That's another 200K on my side. So total investment would be 400K at that point. I'll be all the way at 2 million over here. And then with that in mind, you're making about 300K a year based on 15%. Bear in mind, it does. These got quicker. So where I'm looking at 20K, it's most likely going to be in the region of somewhere like 13, 14. Sure, I can make this go quicker as well. If I do 2 ISAs, I do one on myself, one on my wife. I could do it quicker. I could do one on myself, my wife, my brother, my mother, and so forth. So just kind of spend some time and look at that, because on a statistical average, you'll hear this from a lot of people, Warren Buffett, Stephen Bartlett, and so forth, where they talk about this particular investment in S&P 500 ETF accelerator, which is basically accumulating, which essentially reinvests your profits and doesn't pay you dividends, because I don't need the dividends, but it doesn't pay you dividends, it just reinvests it, so your profit then compounds as well. So then it keeps compounding and making you more. So then in the end, you can see that your ending balance over here, that would be your ending balance. And then this is actually the interest that you've made on a yearly basis. So that's your interest on a yearly basis. That's your contribution every year. That's your starting balance compounded. And then this is the ending balance. So that's the beauty of it. You start the year on 134, you end the year on 175. 175, 221, 221, 274, so forth, so forth, so forth. And it just grows. So I hope that was useful. Let's see. Salty Bees view. So I got the more insight for the short. I see. So yeah, definitely. So Mark also mentioned a short for this week on gold and silver. I assume that's what we're talking about, and the DXY as well. That's why I took this into consideration as well. Also, you have to look at something like gold. Remember, if gold is extremely overbought and people are trying to get repositioned on it, they may be taking their money out of gold and putting it somewhere else. But right now, people are not getting confidence into the US dollar. So the money's not directly going back into the US dollar at this point. Also, there's this level of, don't know the exact correct word, but I'll say it's a bit of divergence between them. So we're basically seeing that usually when gold is selling off, US dollars appreciating quite a lot. Right now, we're not seeing that correlation. And because there's a lack of correlation there, that means there's a major imbalance in one or the other. And the money flow is not going back into the US dollar at this point. The money flow is going elsewhere. So then when you bear that in mind, if gold is going to sell off like a huge amount and gold doesn't really move, it just consolidates, there's a build-up of liquidity somewhere that hasn't been released. So that's either going to be moved across into something else, or we're going to see a massive move on pairs like gold and the DXY later. So yeah, here it seems like more lucrative in a way to store money for interest. Yeah, for sure. Banks, some banks give you 0% in Greece here. They give you 0% interest on your money that you leave at the bank, which is horrible. Imagine that, 0% interest. I mean, I don't get me wrong, I have a few friends across the world, and their banks don't give them interest either, or they give them like 1 to 3%. So yeah, still it's not great. I think the most important thing as well is when you're looking at sort of putting your money away, you don't have to have tens of thousands. Even if you put, for example, $100 a month or £100 a month into your S&P, over the course of 10 years, you'd have roughly around about 100 and something, 130,000, give or take 150,000. So people don't see that as a maths. It's only £100 for a lot of people in the UK or in America and stuff, which they can really afford. Obviously, you know, I understand where some of my brothers in like Tanzania and stuff, they don't have that $100, so they can't be making those sort of investments. So that makes sense too. But again, this is why, you know, being a trader and being able to read price action like this is something that's probably going to be able to help you get there, but it's by not rushing. That's the most important thing. I think the problem that most people have, the biggest issue that I've noticed, including for myself when I reflected, was rushing. It always comes down to rushing. And one of the reasons why I showed you that diversified investment, because for me that helped me take a step back and not rush. When you're constantly trying to make money and you're constantly thinking that every decision you make is going to dictate you getting a better future, it is correct, but at the same time, you're putting pressure on yourself that's unnecessary, that then is going to influence your decision making subconsciously to force you to do things that you shouldn't do because you believe deep down, it may not be your conscious thought, but it's a subconscious thought that you've programmed yourself with, that you believe that by you taking more action and you being more strategic and being a little bit smart and using some of your knowledge to your advantage, that's going to make you more money. But I promise you, one thing that will probably make you money is by having a set process, a routine, following that regimentedly, consistently, and by doing that over and over again, that's what's going to make you money. And for a lot of people that sounds so easy, but it's so difficult for a lot of people, because to do something so simple and do it over and over again, saying it is simple, but doing it is a different thing. It's like going to the gym. You know, why doesn't everyone have great bodies? Why doesn't everyone have 8-packs and stuff? It's because they don't have that discipline to just be consistent and do the same thing over and over again and push themselves out of their comfort zone every now and again. Those people who are, they build that discipline, and then at the end of it, they get rewarded with with the things that they want. So that's something to bear out. BTC short, let's have a little look. BTC short, what is going on? Why is it going slow? Crypto, BTC, all right, let's go.
Can you disconnect your phone?
All right, so, I see what you're looking at. But yeah, look at this. You're trading against that. It's not even tapped into this just yet. You've got a little section up there. That little minute little wick right there. It hasn't tapped into that yet. It's left a gap. This can still sell off with a gap, so fair enough. I just think you're playing against quite a lot, because remember what we were looking at before. This was the base. It's your first touch, second, third. And then if you mark up the tops, even if I take it from here, that's your section 1, section 2. This is your 1, 2, 3 with this going into it anyway, but there's nothing really major. You're basically playing against all of this structure at this point and saying that, okay, well, we could potentially sell off even here, but then you may not even looking for that. You might be looking for a short-term move to even here before it comes up. I don't think that's wrong, but then at the same time, it's like, why not just wait for longs? Why not just wait to see what happens, let it develop, and if it gives you something here, then fine, you could take that on a more of a higher risk side because it's still within that. But you know, you're kind of confirmed with a little bit better structure. Obviously, this is the daily, so I'm gonna demonstrate it before. And then you know, you might get something like this. Price sells off, does that, and then you could take advantage of something like that. That seems a lot better to me for a trade. Taking that opposed to kind of trying to get in short on something small in there. Even though something small in there could make you money, the real question is it worth it? Because the odds are, when you get zoomed in like that, you're basically trading it from here to then manage it into that point there as a hope that it sells off from here, and then for it to continue maybe selling off. But then when you zoom out and see that bigger picture, the long still looks pretty good. So we have to be a bit more careful with the trade idea there. And I think this still has room where it can kind of come up, sell off a bit, come down, come back up, sell off, creates a base. That's your 1, 2, 3 sort of section here, and then it goes, right? And then you kind of just try to get into a trade there, and then you kind of zoom out later once it's actually played out, and then you're like, oh, actually, you know what? I should have just waited for something. Or worst case scenario, and I've seen this happen quite a lot, is it's giving you some sort of lower time confirmation here, and then what happens is it just pushes up now, and it goes here, and then it creates continuation here. And then you realize I should have taken a trade here, and I shouldn't have just been trying to zoom in there because it didn't even tap into the gap here, and there was a possibility it would fill that gap. So you see how the market can just kind of mess with you in those areas. I get it though. I get that looking for a trade there looks good right now, but when you see it from, you know, the perspective of what it could develop in, it's a lot better. Like here, it's still difficult. You know, you could argue, okay, well, we've broken that. What's happening here? This could now develop and do that. Even if it created that, you have to then ask yourself, like, what is it doing? It's possible, but that's not my likely scenario for a long. I think right now this is more for trap. If you're looking at something like that, I think that's a trap for something else. I don't think that's your typical short, but again, I could be wrong, of course. Let's see. Yeah, I'm really happy to hear that, Just Trades. Bless you too, man. There ain't no gap on my chart. There ain't no gap on my chart. Again, I think you're looking at BTC USDT, if I'm correct. Okay. So yeah, even so here, man, like gap or no gap at this point here. Look at the 4 hour. Look at the base on it. Over here, look at those wicks. I mean, look, definitely this chart looks a little bit better. Don't get me wrong. It looks nicer in terms of the chart. the positioning over there was looking really good. So I think the trade looks good for the USDT. Again, when you look at it on the hourly, like that doesn't really even show me a two bottom sort of situation unless I really zoom in. That's kind of like a base one. That's kind of showing me a footprint. It would have been nice if there was a gap. If this comes back down and then comes back up, again, like in terms of the impulse to size of the flag here, I'm not preferred for it. And then even if you saw that and you zoomed out and then went into it on the 4 hour and you looked at it, still doesn't look like your typical price action. So I would leave that. I'm not really too bothered with a trade like that, man. Even though BTC does look like it could be some phenomenal trade, yes, it's not worth it. The makeup of this is not looking good, especially on the 4 hour. The start of it is those wicks. How many continuations have you taken on the 1 hour or 1 hour entries where the 4 hours look like that? That's played out. Very little, I'll be honest with you. And if you go through your data and you see that, you'll come to the same conclusion. You seem like a person that has come to acceptance, understand with your capabilities. You are okay with taking your foot off the gas and rest, spend time with your loved ones. Yeah, absolutely, man, Tank. All right, so I think that's an absolutely incredible question right there, is what kind of got me to the mindset of, taking my foot off the gas, but being able to rest and spend time with my family. So I wouldn't say I took my foot off the gas entirely, but I know that's not exactly what you mean. Basically, when you're kind of just like in the full steam of just trying to get into trades and, you know, getting into the zone every day and being like, all right, today's the day. All right, yeah, man, I'll break even. I'm going to get to this point, that point. At some point, it kind of gets to you and you're kind of just like, man, I'm done doing this dance. You know, I'm done dancing with the markets constantly going up and down, taking so many trades. Maybe I can be smart and take these lower time frame trades and just stick with them. Or maybe I can just stick to this, that, you know, and you start just trying all these different little things where, in all truth and honesty, the one thing that is going to get you successful is the one thing that you're avoiding the most. And it's basically that high level of patience in combination with the discipline to just do a simple thing consistently. That's the truth. But everyone's different, man. For me, I've been quite stubborn along my journey where I've just thought, you know what, maybe I can be a little bit smarter. Maybe I can approach it differently this time. Or perhaps maybe I will, you know, take 1 hour trades only, this and that. Like, you know, I'm thinking that, and don't get me wrong, things like that do help for sure to kind of master one time frame and put it in combination with others. But the truth is, right, there's not one thing that fixes everything. That's the one thing that people don't tell you. It's a combination of just kind of understanding that in order for you to make money, you can't be a slave to the markets. You can't be sitting by the charts all the time trying to make money. Like, you need to go off and relax and enjoy yourself. Like, do something like play the piano, maybe do some painting, go out for walks, you know, go eat nice food, and don't like sacrifice everything in hope that one day you're going to be super rich. Like, what it is, in order for you to live like a wealthy person, you have to be a wealthy person, right? But if you don't know what it's like to be a wealthy person, then close your eyes and visualize yourself what you'd be doing as a wealthy person. And if you're visualizing yourself in these fast cars and Rolex and chains and whatnot, right? Just obviously because that's the average, you know, newcomer to trading. You come to a realization that, okay, well, I can't really experience that right now, right? Because I'm not in a position where I can buy Rolexes and chains and stuff without, you know, putting myself really broke. Then you come to yourself, what type of food will I be eating? How will I be dressing? What way will I compose myself? How do I keep up to date with my chart work? What sort of things will I be doing on a weekly basis? How does the professional version, or does, even if you can't envision yourself, the version in your mind of that professional consistent trader, what sort of things do they do on a daily basis that makes them consistent and profitable? How do they talk to themselves? All of these questions, you can kind of write them down, and then you don't need to go and seek those answers from someone else. In fact, you can actually just visualize them. You can visualize them in your mind because you actually already know the answers. It's just, you need to kind of confirm that and affirm it to yourself that, okay, well, if I want to be a professional basketball player who do I want to be like? Well, I want to be like Kobe. Okay, how did Kobe set up his day? Well, Kobe would practice for 8 hours every day. Okay, well, what did he do during those practices? Well, he would practice free throws for 3 hours. He would practice, running up and down the court, doing suicides for like, another hour. And then he would practice his dribbling for an hour. And then you would kind of see, okay, well, he has a full routine and he do that every single day. If I want to be on Kobe's level, I need to do that every day. So same thing with your trading. You kind of have to establish what sort of things do you need to be doing on a daily basis that's going to make you that type of person. Now, again, it's hard work, and that's why a lot of people, as soon as they start hearing that things are going to get a little bit more difficult and it's going to take a lot more time, that's when they start to come to the realization that, oh, you know what, let me just keep trying. It doesn't matter. I don't need to listen to this. I can just keep trying without it. Truth is, it's not easy, and people don't want to listen to it, but that's the truth. In order for you to be great, you need to put in the work. You need to work really hard. Then later, over time, it gets easier. But you don't want to take your foot off the gas and get complacent. So, still got this BTC trade in front of me, and yeah, I can see why. I think, look, if you're really going to take a trade, take an insurance entry on this. Truthfully, it's one of those ones where, personally, it comes into this area. Let's say it washes out, comes back in, gives you a trade here. At least if you can manage it into like a point like that. I don't know what the stops are actually. I know it's quite hard to get it with margin, but if you can manage it, I don't know if it will come all the way back down here. That's the thing. So it could come here and then develop and then kind of get messy. And the next thing you know, it just became a very steep, ugly flag. Like, there's so many little variations with something like that. I'd be careful. But again, I don't think it's a terrible trade. I just think there's better trades on the table. So if you are looking at whatever trades you're looking at, I would say weigh them up to what other trades you have on watch, and then kind of decide, is this the one that I'm willing to put my capital on this week, really and truly? Or is it better for me to wait for that EU trade? Or is it better for me to wait for the DXY to follow through? And, these sort of questions you should run by yourself. So with that emotional composure and the foot off the gas question, kind of just to finalize on that, I would say that you need to understand yourself, understand what type of trader you want to be, understand kind of your self-beliefs as well. If you believe that you trading every single day is going to make you successful, try it. And when it doesn't make you successful, then come to the conclusion, what do you need to do differently, right? Because remember, the average losing trader trades every day. So if the average losing trader is trading every single day, ask yourself, am I a part of that average right now? If I don't want to be a part of the average, then what does the average successful trader do? Well, they probably do the opposite. They don't trade every day. So I want to put myself in that category. So I want to start doing things that the successful traders are doing. I don't want to do things that the unsuccessful traders are doing. And the way you can differentiate that is by seeing what unsuccessful people have in common and what successful people have in common. And then you can kind of make that, that conclusion between them. Let's have a little look here. EJ. Oh, you know what? I had EJ on watch. Let's have a little look. I did go for it earlier, or did I? No, I didn't. Oh, I did miss a few pairs on my watch list. My bad. So I've got silver here. Silver's interesting. I want to wait to see if silver comes back up. Maybe even retest that. But more so, I'm looking at silver to potentially come up here, leave a bit of a gap, come down, maybe set at the second bottom here, comes back up, spikes up, taps into this, sells off, insurance entry, and we go. I would like to see something like that. That would be great for silver. It will give me more of a better confirmation. This was an interesting flag. I was looking at something a bit more, but then when I reviewed it after, I kind of saw it and I was like, okay, there was a trade there. And then we had that one just above, which wasn't clean at all. But anyway, that's what I'm looking at on silver. Let me just do EJ. So EJ for the short, yeah, man, it's looking better. It's looking much better. The thing is, right now, we tapped into the value area here. We failed to create continuation. We sold off aggressively, which is a great sign, a really good sign. We are now, I don't think this little bit holds enough weight for me to be like, okay, we're turning around here, because if we were going to turn around, we would have done it already. Right now, I just need to wait for continuation. I'll go to the 15 just to kind of refine that a bit more. We can already see it looks like something is developing here. I will be patient with this. Maybe if it comes up, sells off a bit more, and you get something more in the signs of something like that, and it maybe works in line with this. That could be an interesting scenario. Odds are maybe we don't even use that piece of price action above, and we start creating something different. So price just sells off from here, comes down, and then it starts developing in these areas. And then we get something like that. And then that becomes its own piece of its own. But it's a tricky one right now, because if I go down to the 1 hour, I don't like that wick. I don't like the wick there. That's kind of just wicked up and then kind of shown that. I think a sign like this would be so much nicer if we came like that. We near missed this, we came down, came back up. We took this out, maybe even came up to structure, and we played with this sort of section here, opposed to having to price that into our trade. So I think it's undeveloped, but I will be looking for some sort of continuation on the 1 hour where it develops. And then once it's developed, I can then potentially just see how will I be taking that trade, basically with the insurance entry here, most likely. That would be it for EJ, to be honest. I got New Zealand CAD on here as well. So as I was saying on the SMB on Saturday when I made the video, I was interested to see when price gets up to those areas. It hasn't quite got there yet, so we'll wait for New York session, see how it responds. But if we can get up there, maybe we might be seeing some Asian session trades. I wouldn't be staying up for Asian session, but London session, we'll see how that shapes up. GBP CAD, similar scenario, you know, we're within that level of that range, so I need it to develop and get to this area, probably late week for me. New Zealand CAD, New Zealand US dollar, sorry. Listen, with the DXY selling off and everything included, I think the likelihood is we're going to have to price this point up here and there. And we're probably going to go long before we go short. I did want to see a short here. I wanted to see if that followed through and we create continuation down there. I would have looked to go short, because then it basically was, that was your liquidity there. It extended, but then it's now following through to sell off, and that was just a part of an extension where it exhausted and then kind of created a bit like of a mini star, M star here. And then we have a bit of a gap there as well, but again, doesn't have to do that. If I go down to the 1 hour, you can see it a bit more clearer now. And it's just kind of trickling. So I wouldn't be surprised if this whole section here, in fact, develops. Let me just clear that off. I wouldn't be surprised if this started developing, came up, came down, and then we had that. Something in those ways where we just continued moving to the upside. So I don't want to be putting too much weight on NU. In the case where NU does follow through, I would like to see this kind of just drop off, create continuation down here, and then I can basically say, okay, great. So that was the squeeze into here. We've then traded through the origin of that section here. I can then manage it into the next section here, take advantage of that sequence. And then if we do start following through, maybe we start coming to the downside, and then I can just be aware of, you know, these sections here. And then that'll basically be how I would look to play NU. So NU, again, I'm just waiting for that solid sell-off, or if price comes back up there, then, you know, I can basically see if I can take advantage of a continuation into that section. But for now, it's too premature for me to take any action on it. Aussie CAD, I did cover this one at the beginning, so I'll just cover it again anyway. I was looking for the price to come down here before we went long. We got a 15-minute continuation candlestick confirmation in here to go long, but I wasn't willing to take it. I wanted to see a bit more. In this particular scenario, we didn't get it. It's just continuing now. So we are looking at reaching those highs there. If we get something that comes down for New York session, then I'll be looking to go long. If not, you know, I'll wait for the next opportunity. Euro GBP, it's nearing, but again, even when it gets there, I've still got some waiting to do. I need to wait for the 4 hour to reject and then look for more continuation to the downside. So it's a bit more of a patient one on Euro GBP, but if you haven't got it on watch, definitely just do an analysis on it, because it's definitely, you know, it's definitely an area of interest, but you need to wait for a bit more on it. Hybrid trading. Do you know what? I haven't actually gone through the new content yet. I'm kind of waiting a little bit to kind of get a feel a little bit more better before I jump into it fully. But I will kind of just listen to it and do one run through and listen to it. But then when I go through doing a 3-step process, so taking notes and kind of just reviewing it and studying it properly, that will be something I'll be doing when I'm in a bit better energy and flow, really. So even so, what's the new funding content? So yeah, it's just basically to really help you with the process of getting funded, staying funded, and acquiring more funding, and then kind of just a method to do it. For example, like sticking with 0.25%, and then the reasons why. And that's what I'm assuming. I haven't watched it. There hasn't been many leaks about it, so I couldn't give you everything about it. Yeah, thanks for joining. I'm sure you've already left now, so I appreciate it big time anyway. If you've watched The Matrix, it'll be like near us, Morpheus. I'm going to be dodging bullets. Yeah, you know what? There was this one part in Matrix about the spoon, bending the spoon in the reality. And I watched a video recently where it explained it, and it was quite interesting because it was more so on the side of the spoon's not real, and most of the things that we perceive in our reality, they're not actually real. Like, for example, there's certain fears and limitations in your life that you've put in place, but they're not real fears and limitations. Like, for example, let's say a spider. You've been programmed by television and movies to think all spiders are dangerous and they can bite you and stuff. But once you kind of come to the conclusion that that's not true, and they're actually very friendly, and some of them are venomous, yes, but the majority of them are not, and in fact they kind of keep to themselves, and they're very scared of you. You know, it starts to rewire you, and it's kind of comes into that level of rewiring where, you know, you realize that everything was about perspective. Everything was about, you have the generic programming perspective, and then you have the sort of free, open mind thinking perspective where you can then see things for what they are and basically not go through those mental struggles. High frequency bots, to be fair, there's a lot of high frequency bots out there. I don't know if they make money, but they do something. Just watching silver for the short term, reacting off the low. Yeah, silver's going to be one. I think definitely worth keeping an eye on silver, because I think it's one of those ones where it could just shape up quick and move, and people would just take their foot off the gas because they think it's slow, and then suddenly, boom, it gives a great trade and just flies. Let's see, EJ and CJ, similar. Let's see CJ, because we did look at EJ. Yeah, I think for the long, right? I would be looking for the long, I think. I'm looking at the value areas up here, and I'm thinking how price is moving there is pretty aggressive. On the daily, even though you're here, it looks like there's an expansion in it. It's not the best, it's not the cleanest. Hold on, it's not the best, it's not the cleanest. It's there. On 1 hour. Yeah, it's just sitting in that area right now. So I would wait for insurance entry to confirm this. I would want to see price push up, give you some sort of trade here, and then go. And then it kind of just confirms that, okay, this is an expansion, this is a move. And then you've got a clear run to the upside, and then you zoom out and you look at left, and you're like, okay, well, sure, we could be completing on this, so we can manage it aggressively into that high. But then if we breach it, we end up trading into that complete high there, and then the one above, and then your positioning is pretty good because you're positioned down there. Then take the trade into that section 1 and then section 2, which I think is pretty good. Yeah, it's pretty good, CJ. What do you have on gold? I did cover gold actually. You'd have to kind of go back on the video, but just briefly, I am looking at this for potential more shorts, but I'm not going to be surprised if we get a strong buy just randomly come in, because right now people are quite gold orientated. They're pretty, what's the word? They're pretty confident in gold's long-term growth. So people would see this as a cheaper price. The same way if this was the S&P right now and price did this, eventually they'll just buy that straight back up and it will continue. And I think we're seeing similar things in the market right now. However, we haven't had any healthy pullbacks in a while. So a sharp pullback makes sense. It's just how deep does this pullback go? We can't tell because we've had very unsustainable longs come into play for quite some time, that now we're pulling back into this area here. This can easily just buy back up and be here, then it consolidates, and then next thing you know, we're in a range for a while, and then it goes, right? That's very possible too. So then it becomes this prolonged period here, but we get it in different size here as well, where's accumulation. So right now, I would be consciously careful that this can develop into so many things that if you're going with something right now, the current trend is showing shorts, but you wouldn't go too much risk on it. You would have to be consciously careful and be like, all right, well, if I'm looking at price here to here, it's basically done its move in the sense of that, but it's probably going to sell off a bit more, convincing people that the market's really going short. And then when everyone starts getting out their position and really getting short, what's going to happen is price will just get bought back up and price will come back up. So don't anticipate to take a trade here and then ride it all the way down for a long time. It's probably most likely going to pull back on you at some point. So you have to basically take that into mind as well, that when you're taking a trade that's in high value area, it's been extremely bullish. Yes, we're in a pullback phase, but a pullback phase can even pull back within the pullback phase. So, you know, we might sell off, but then suddenly push back up. So you want to be a bit more smart with your investment right now and understand that, you know, when that happens, just take advantage of what you know. Take advantage of typical price action that's playing in your favor. You can take advantage of these small flags, right, when they're trading into these areas, but then you have to manage aggressively. So you got your stops here or something, or maybe even your stops here now, and then maybe that comes back and takes you out. It is what it is. You know, say you got this trade here, let's say there was a trade right there, or just, you know, through it, you would then manage it aggressively in the same way. You'd put your stop somewhere in these regions here. So keep it the same way. Don't change things too much. If you start getting continuation here, you know, take that and then manage it into your next point. Let's say your next point was there, and then you just manage it there, then you start trailing it and following it and just follow that process. And I think that's the best thing you can do in most of these scenarios, because we don't know for certain how far this is going to be coming to the downside. It could be a massive sell, it could be the start of a huge sell, it could just be a part of a short-term pullback with a sharp pullback to the upside. There's all these different variations. I couldn't tell you exactly what's going to happen because nobody knows. Bro, the post you shared on your story, jack of all trades and all. Yeah, I know, honestly. I was laughing. It was actually quite interesting though about the jack of all trades. Like, you know, I kind of thought about it too, because you kind of become a jack of all trades, but then they always tell you you're a master of none. But then I realized sometimes a person who's a jack of all trades is better than he can be a master of one at least. But no, I don't even know, man. It was confusing. BTC looks great. Yeah, BTC does look good. We covered it as well. For the 4-hour entry, let's see. Price pulls back to 55, 60%, 7%. What is? Yeah, I think as well, if we're still talking about gold here, I think the pullback, it's a healthy pullback, but it's sharp. So it's a momentum-filled pullback. So I wouldn't be surprised if we get small continuations and it just goes. And then when it's kind of pulled its liquidity or whatever it's looking for, it'll start making decisions. But at some point, we will see prolonged continuations. It's just been very aggressive to the upside, and now it's pulling very aggressive to the downside. So there's a lot of people, there's a lot of attention on gold right now. I just think that one thing we have to come to realization is when price starts to pull back in any very bullish market, people get very fearful. Because think about those different types of traders, people who are just scaling in constantly scaling in, like, and I've seen it, you'll take a trade, for example, here, then you'll take another trade there, you take another trade here, another trade here, another trade here. Next thing you know, you're like maxing out your margin, right? And then you're up here, and then maybe you even take a trade there. Some of them don't even use stop losses, bear that in mind. So, this person's probably running, like, call it around about, like 72%, right? On personal capital, whatever, right? Probably not prop fund. He's running 72%, right? And then at this point, or maybe less, maybe call it like, 42%, right? At this point here, this person's trying to buy gold forever. Euphoria, call it greed, all of these things are kicking in. Then at this point here, this is, let's say the first trade was like sensible, 0.5% risk. Next one was 0.5. Then this person's like, okay, 1%, and another 1%, and then another 1%, and then another 1%. And this like, oh, you know what? Let's go. I'm gonna go 1.3%. Next thing you know, the exposure is getting bigger and bigger, but they're moving to break even, and so forth, and they're scaling, right? But then what happens is, they get involved here, and now at this point here, they're so euphoric with all of this. Man, I'm gonna go 2.5% risk. I'm gonna go another 2.5% risk here. I'm gonna go 2.5 here, 2.5 here, right? And then they're holding it, and then what happens is this comes down, and then they get taken out over there, and they're like, okay, you know what, that was a loss, but it's probably going to continue, so I'm going to buy it again because they're so euphoric. And then they put another 2.5% risk, and then they get taken out on this one here. So now they've lost total of, let's say, 5%. All of these profits are just disappearing, and now they're in drawdown and they're losing, right? I've watched a lot of other people's videos, and I've seen how they trade as well. I'm not saying all traders trade like this, but this build up here ends up making them greedy, and then by the time price is here, they're in drawdown, and then you're thinking, but you made all this, but somehow you're running 42% optimal at this point here. You're at 42%, but then by the time price is here, you're at like minus 3%. Right? How does that make sense? Do you know what I mean? Like people just too aggressive. They don't manage their risk properly, and they're skilled enough to make profit like this, but then they're not skilled enough to have damage control. So then they start losing it like that because euphoria and greed, everything kicks in here, and they don't give themselves a appropriate routine and process to reset. Over here, let's see. So for the H4 entry, if the pullback, oh yeah. To be honest, I wouldn't keep it fixed on a certain percentage amount, because right now it's a difficult one to measure. Like if we just look at that last impulsive leg, right, from this point to this point, and we measure that up, and I take it from here, so I'll just take it from here to here, borderline 50% is there. It's coming deep into that, but the odds are, even if price comes down here, you don't want to just buy it there. Like price can just really mess about in these areas, do that, and then it starts, just coming back up and messing about. And gold goes through this period, but in a messy way. So I'm gonna be waiting for this. I think gold will come back up at some point anyway. Well, I don't know if you remember this, but you probably definitely do. And it was this period here in, I believe, hold on, yeah, it was here. It was around about the end of last year, where this is where major euphoria came in. So we had this, and then price pushed up, and then we came to like this point here. And then at this point here, for some reason, everybody was talking about gold. Everyone was talking about gold around about October. all the news, everything was like gold, 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 gold. And then I was there like, okay, and then what happened was gold just declined. Gold declined, and then it started moving into those areas there. And people were just so fearful at that point, and then price just consolidated for a period here, and then it continued moving, right? Again, it's just one of those things which I came to a realization that everybody gets fixated on something at some point. Even at this point here, you know, during 2025, this consolidation, we understood that it's probably going to go higher. This move was just accumulation of all of this. I think right now we're seeing the same thing that we just showed you here. We're seeing over there. This is your base, most likely, right? Price hasn't really shown. Oh, do you know what? Let me just take this tool here. I'll bring it back up. Right, we see something like that. Price is basically hovering in this area here. It's now tapped into this section there, and the odds are it comes down, taps into your 50%, comes back up, messes about, comes down. Look, this is just, it's interesting because price repeats itself over and over again. It will do that. Forget this 50%. It's just there, obviously, as a random piece of price, but it's going to probably come down, sell off, and then push back up aggressively, and then kind of mess about accumulation for more people to get buys in there for the longer term move, and then price continues moving higher. I think that's probably a very likely scenario, but it's just right now it's selling off. And I think a lot of people, they want to be getting involved on this because they want to make some money. So I get that too. It's just, you're pretty far within the sell right now. And you want to be a bit careful when you are getting positioned on this. Even if you get a perfect structure, you still want to be a bit more careful because we're not trading into anything significant, but at the same time, there's like psychological levels that are being played. So wait for the structure, whatever, you know, you get your structure, you take the trade there, you see your next inflection point down here in that region, and then you basically just manage it accordingly into A to B, and then you walk away with your like 5-1 over here. And then that's basically the trade, and then you wait for the next trade and you take it, and then you don't kind of get sucked in like, oh, but I'm in 8% drawdown and I need to make 10% on my account, so I'm gonna try and get 8%. Like, nah, forget that. Just keep a set scenario and keep playing the trade like from A to B, and it's like, okay, cool, that's my risk reward. I'm going for a 6-1 here, and then I'll be in for the next trade somewhere else, and then you keep playing those, and that'll be a lot better. GU would be high risk at the moment. Let's have a look at GU. I mean, I don't like GU in comparison to some of the other pairs, but yeah, I mean, you've got this low here, you've then got that low down there, so then when you look at it, there is that room there. Also, you know, if we're marking on highs and lows, you know, we can then see multiple different areas. I think these would be our key areas that we'd be looking at. Right now we're within this range, so if I look at it on the 4 hour and I zoom in a bit more, it seems like we've basically started creating something in here, but you know, I don't want to just base it on something like this. That's still a little bit irregular for me, and we haven't tapped into that bit there then. So that leaves a bit of sign of a gap. So I would probably be more on the side of, what about that section there? And surely if we're going to be playing this, we need to see something. So I'll go to the 1 hour. Yeah, I mean, the odds are it does two things right now, and this is the way that you could play GU. You could wait for this to develop, and if it gives you a clear enough retouch, and then gives you a nice rejection candle there, you could play that to the downside and manage it accordingly into that section there, and then see if it follows through further. Or you get this, but it fails, right? It doesn't confirm here, and it goes and it continues moving back up, and then this evolves. You then have this section here, and then that's your 1, 2, 3 back into that area there, and then you get a push down and an insurance entry, and you can sell that there, and then you're basically taking the same trade and you're taking it to the downside. That's the way that I see it, to be honest. If you're basically playing this, I'd be looking at shorts though. I wouldn't be looking at longs, because when I go back to the daily right now, there's nothing really showing me on the daily as well for longs. It's just slowly bleeding to the downside, and then there's a clear point over here that it looks like we're moving towards. So once we start breaking between here, it's just a clear run to the downside. So that's basically it. Again, it does require patience, this one. US oil ain't interested in these pairs though. Yeah, we can have a look at US oil commodities. Yeah, US oil isn't really, it's not banging either, to be honest. Let's see if we pull that up here. It's kind of retesting in that section now. I'm not looking for a V shape here as well. So again, this would be somewhat underdeveloped. If I mark that low there, it does have a gap here. I would want to see this kind of maybe come back in, come back up, tap into that, and then we had something like that. That would be interesting for that sequence there, for sure. Because then you can kind of see it as well. That's a bit more of a running channel at that point there, where it's basically just running into the downside. So that would be nice. If we had something like this, I would be preferred over it. How about a 2-touch on GU high risk? Nah, forget the 2-touch, man. 2-touch is much higher risk, so I wouldn't want to mess with that. But yeah, I think what I'm going to do now is I'm probably going to check out the new content, because I am feeling pumped actually for it. Let's have a quick login and see. Maybe you'll get, I can show you guys, and then you guys can make a decision if you want to get a membership. Let's see. Where is the new content? So, well, maybe it's on the dashboard. Falcon, oh, here we go. Here it is. The funding mechanics. Boom. Course overview, just so you guys can have an insight of what's in there. And yeah, that's basically it. So you can see it. Module 1, evolution of funding, prop firm blueprint, ultimate funding checklist, the psychology of scaling up and building your funding empire. Honestly, I think it's just an addition to what we already have, really. Like, I'll be honest with you, even if this didn't come out, I'd still be even more profitable. It's just, these things help. It's worth having on top of everything, and it's made for a reason, because somebody with a lot more experience can see that it's needed. But yeah, definitely funding mechanics. Most likely, once I get through it, you know, it will just become a subconscious competency. And a lot of the things I'll be doing, which, you know, if you follow me on a day-to-day basis, you'll probably already know, with me implementing it, the good benefits of what's in it. So you'll kind of get that in some level for translation through me anyway. But yeah, I'm going to jump into that now, and we'll see how that goes. So guys, absolute pleasure. I hope we had a good session, and if you have any more questions, feel free to drop me a DM on IG and I'll get back to you. Take care. Oh yeah. See you later, Zephyr. Take care.